Okay. So we are ready for the event and welcome Isaac to Fuji Finance. It's regular educational event which calls Fuji Educates and Bob 40 it's Bayan, co-founder of Fuji Finance, and Dakota it's Daigaro, co-founder of Fuji Finance. And let's warm welcome Director of Communications at Radiant Capital.
Yeah. Hey, Isaac, and yeah, thanks for joining. And hello to everyone who is listening.
Excellent. Hello, everyone. Happy to be here and excited to be joining you for this Fuji Etiquette show.
Wow, great. Really curious because Radiant Capital, it's like one of the phenomenon. I mean, without any VC funding, without only community-driven project, reached 220 million total value locked. I just checked in DeFi Llama, and I have a lot of questions, Isaac. So, but let's maybe warm up a little bit, and you can introduce yourself, your experience in blockchain overall and in decentralized finance specifically, and then we can proceed to Radiant Capital. So please, Isaac, introduce yourself.
Excellent. Absolutely. Thanks for that. I'm Isaac Prada, Director of Communications and Project Management at Radiant Capital. And I'm originally a mechanical and electrical engineer, then turned Formula One engineer, aerospace engineer, and entrepreneur for more than 10 years. And I jumped onto the DeFi space. Well, I had some first contacts 2-3 years ago when I was checking out and calculating profitability of some mining units for Bitcoin with a friend, and then properly jumped onto DeFi full time for the Radiant project. I love the DeFi ethos, the projects that are being built on Arbitrum and many other chains, of course. And I loved what I saw at Radiant, the vision of becoming the greatest, the number one omni-chain money market on DeFi, to be able to borrow and lend seamlessly cross chain. And I jumped on board, and then that's basically the start of my full time DeFi story with Radiant, and very excited about everything that's coming around the corner.
Wow, cool. Because actually, they are also former aerospace engineer.
Yeah, I was gonna say that. That's
great.
really cool. Really cool.
Excellent. Yeah, I worked at Urbis for 3 years, and it was a great experience also.
Wow, impressed. Okay, so let's start from the beginning and from the basics. What is Radiant Capital and what makes this project unique? Because like really strange how a new project only 1 year on the market and get so big market share. Please explain us, Isaac.
Absolutely. So Radiant is the leading omni-chain money market on top of built on top of layer zero technology. So this is the underpinning technology that we use to offer a seamless cross-chain experience. And basically, the fact of being omni-chain money market, one can think there are many other lending and borrowing protocols, money markets, but they are not truly cross-chain in the sense that you have to, for example, in the borrowing and lending example, you have to deposit your assets on one chain, say mainnet, borrow it on the same chain, mainnet, and then bridge it over to, say, Polygon to buy an NFT or whatever you want to do with your assets. So it's not really a seamless experience. It's not really cross-chain. You still have to make use of bridges with all the security concerns around them and so on that we've seen, sadly, in the past months. In the case of Radiant, the experience is truly cross-chain. So we started on Arbitrum. We've recently launched our V2, and we are currently also on BNB chain, so on Binance chain, and we will be shortly launching on 5 other major chains. And the one of the main differences in terms of user experience and being really cross-chain is that you can deposit on chain A, for example, Arbitrum, and borrow directly on chain B, in this case Binance, without needing to bridge your assets. So the experience is very seamless. It is really cross-chain, and it allows for many more trading opportunities, trading strategies, which are more easy to carry out. That's in the like the backbone of Radiant. Then additional aspects which make Radiant unique, and these are probably the key reasons why Radiant has grown so fast. And the numbers you were quoting on DeFi Llama don't account for all the total value deposited currently. It's close to around 400 million in total between Arbitrum and BSC. And basically, the unique aspects that make Radiant stand out from other lending and borrowing protocols are first, that we share protocol fees. So this is not something that you find elsewhere with protocols that we all know in the lending and borrowing space. We share protocol fees. So basically, the fees paid by the borrowers when they borrow are shared with the community, with the Radiant users. Currently, the split is 85% of the protocol fees are shared with the users and only 15% are retained for OPEX, so salaries and marketing expenses and so on internal to the protocol. So 85% go to users of the protocol, which basically are two types of users. The basic user, which just deposits and borrows, so you will be obtaining your base APY. And then on top of that, if you provide liquidity to the protocol on Arbitrum or on BNB chain, you will earn additional protocol fees, and you will, if you go above a certain threshold, you will activate the boost in Radiant emissions. So on top of the APY that you are getting, you will get a boost in Radiant emissions paid in our native token. One of the key aspects of Radiant is that protocol fees are paid in hard assets. So you're receiving blue chip assets, which currently include stable coins, wrap Bitcoin, wrap ETH, BNB, and so on. So basically, you are receiving APY in hard assets, and that's something which is unique to Radiant. Additionally, you are, as we colloquially like to say, you are paid to borrow in Radiant tokens. So if you go above a certain threshold, as I said before, of the liquidity that you provide, which is very easy, it's basically going above 5% of your deposits. So if you have $1,000 of deposits, you only have to provide $50 or more worth of liquidity. And once you do that, you will qualify for the boost in Radiant emissions, and you are receiving Radiant emissions both for your deposits and your borrows. So effectively, you are borrowing and you're getting paid, of course, in Radiant tokens to borrow. So that's something which stands us apart. Then the usage of layer zero technology, as I said before, which is one step beyond traditional bridges. It's a messaging technology, omni-chain messaging technology, which allows us to move our token seamlessly between chains. And of course, we have the governance platforms on Discourse, the voting platform on Snapshot. We are very proud of one of our key values, which is our community, very active, very dynamic, proposing new ideas, new comments. In fact, many of the changes that have come with B2, as we will be commenting throughout the show, have come as part of ideas proposed by the community. So the community, as I always say, is probably the most important indicator of any DeFi project, more so than daily active users, TVL, or so on. And that's something we're very proud of at Radiant. So those would be in a nutshell the points that make Radiant stand apart of other similar protocols.
Wow, impressive. I believe we will return later regarding the economic model of Radiant, maybe more like deeply, but let's proceed with some basic stuff. Like I'm really curious what inspired the development of Radiant Capital and how to build successful project without VC funding. Because as far as I know, you didn't get any VC funding, all this huge money. So like how to do it, like how to make it, in DeFi.
Well, from a purely financial standpoint, how to make it is basically having founders with well, I'd say older skin in the game, or a lot of skin in the game, because they've already invested out of their own pockets over $3 million. So we received no funding from VCs, and it was only the team of original founders who have invested out of the pockets over $3 million, and that's the whole of the budget for marketing, team salaries, technical development, and so on. And out of those 3 million, over 700,000 went, only 700. So apart from all the other expenses, 700,000 went only for security. So audits that we've carried out and additional checks that we've carried out on the code, because we take it very seriously as one of our #1 priorities at Radiant. And we are currently in our V2, and the first version was audited by PeckShield and Solidity Finance. Our second version, V2, received even more, or went through even more audits, or PeckShield once again, Zokyo, which was recommended by LayerZero, BlockSec. Now we are currently auditing it with Open Zeppelin. So basically, we've tried to do as much as we could in terms of security, and that's how we've been built, and how we launched the project with the backing of our founders. And this is something which we are very proud of, and hats off to the founders, because they really invested a lot of money to bring this off the ground. The aim was to be able to start and build all the foundation of the project on the omni-chain money market vision without any bias to any VC funding firm and so on, to be able to be as free as possible, as flexible as possible, and build it the way that the original founders had envisioned it.
Mm-hmm. Yeah, I'm curious, Isaac, like about the cross-chain solution that the cross-chain infrastructure that you are using. So you're built on top of LayerZero. Can you tell us more about why you chose LayerZero, and do you plan to support other infrastructure networks? Yeah, curious about that.
Sure, absolutely. So basically, the way LayerZero works in a very high level is messaging technology, which allows for cross-chain messaging without all the problems of security concerns of traditional bridges. So basically, you can send any kind of message from chain A to chain B. That's in essence how LayerZero works. The way we used it at Radiant in V1, we used Stargate's stable router. So basically, you were able to deposit on one chain and borrow on the same chain, and then bridge using Stargate stable router, which had never been exploited. They've invested a lot in security themselves, Stargate and LayerZero. And then on V2, that's the real step further. We upgraded our Radiant token from the V1 Radiant token to an OFT20 token, which means Omnichain Fungible Token. So that's a standard stemming from LayerZero, basically, which means that your token is able to move seamlessly from chain to chain. So it effectively is burned on the origin chain, say Arbitrum in our case, and it's minted again on the destination chain, in our case, Arbitrum or BNB. We are currently operating in those two chains, as I mentioned before. So basically, the final goal or the final benefit for the user of having an OFT token as opposed to a simple ERC20 token is that basically you can move the token from chain to chain seamlessly, burning it and minting it. This is something which LayerZero does, so you don't have to worry about it. You just see that your 200 tokens disappear from one chain and appear on the other chain, and this allows users to pursue the highest APRs or the best trading strategies that they feel. If they feel that it's all on BNB, all on Arbitrum, one part on one chain, one part on the other, they can really seamlessly move their Radiant tokens from chain to chain. And then moving on to V3, further down the line in our roadmap at Radiant, we will fully integrate all of LayerZero features natively within our protocol. So it will be one step even more towards the final cross-chain vision that we have at Radiant. We chose LayerZero because we believe that in terms of the tech itself, the performance, the security, it has never been hacked. It was the most powerful solution out there, and that's what we currently believe. So at the moment, the plans are to go with LayerZero for V2, as we currently operate, and for V3 and beyond.
Okay, really interesting. So maybe you can briefly tell us about the economic model of Radiant Capital, and because I believe, as you said, 15% of all fees goes to protocol and 85% to liquidity providers. Yes, as I remember.
That's correct. That's correct. And it's basically the way we designed the protocol. And of course, we learned many things from V1, from our first months of operation. Radiant was launched on July 24th last year, 2022. So the first months of V1, helped us learn many lessons, plus the ideas of key contributors and key members of our community helped us form the V2 economic model, which we expect to be a healthy flywheel to keep increasing TVL, number of users, and so on towards the future of Radiant. The way it's built is basically that because we saw that there were too many protocols on DeFi that didn't have a really sustainable business model, and that's why we call this new narrative of sustainable yields, we call it DeFi 3.0, as opposed to DeFi 1.0, where we saw highly incentivized emissions, basically trying to attract TVL, mostly mercenary farmers who went to the new protocol, which was the coolest protocol in town, just for the high, crazy yields, and then they went to the next protocol as soon as the yields compressed. So basically, we wanted to minimize mercenary farming within Radiant. We wanted to reward loyal users who were here for the future of the protocol, who were here for the long run and not for the short term gains. That's why we built the business model the way we built it for V2. And basically, the way it works is, pardon me, the way it works is that the revenue going into Radiant is coming from the fees paid by the borrowers. So those are the protocol fees. Of course, each borrower pays in the asset they borrowed. If they borrow ETH, they repay in ETH, of course. That generates a pool of assets that we receive in the protocol, which is shared with the users. In V1, it was 100%. Now, given the necessity for growth and expansion, it's 85%, but it's the vast majority of the protocol fees that are being shared with the users. Going a bit deeper into the actual details, that 85% of protocol fees, which are hard assets, as I explained, coming from the fees paid by borrowers, are split 25% going to lenders, which builds or contributes to the constitutes the API, the base yield that lenders are getting, and 60%, so the vast majority, goes to providers, liquidity providers within Radiant. So basically, when you are using the protocol, you can deposit only, you can deposit and borrow, or you can provide liquidity additionally. If you deposit and borrow, then you will get the base APYs that can be seen on our markets page, which are quite competitive in market terms, but that's all you get, and you get paid in the same asset that you deposit. For example, if you deposit USDC, you get paid in USDC. If you want to go one step further, then you have to provide liquidity, as I explained before, and going into more detail, that means providing liquidity either on Arbitrum or on BNB or any other of the future chains that we launch in. Currently on Arbitrum, the liquidity pool that we have is a liquidity pool on Balancer, which is composed 80% Radiant, 20% ETH. If you choose the option on BNB, it's thanks to PancakeSwap, and that's a 50% Radiant, 50% BNB. So whichever way you select, whichever way you want to go to provide liquidity, or you can provide liquidity in both of them, of course. You provide the amount of liquidity that you wish to any of the pools or to both of the pools. And as soon as you start providing liquidity, you start getting your share of that 60% of protocol fees. So of the 85%, 25% goes to lenders, as I said, 60% to liquidity providers. So that's what liquidity providers start getting the share of protocol fees paid in hard assets, in a mix of hard assets. So that's something, as I mentioned before, which makes Radiant stand out with respect to other protocols, which don't share protocol fees, don't pay in hard assets, and so on. And once your amount of liquidity goes above 5% with respect to the US dollar value of your deposits, so once again, the example I shared before, if you deposit $1,000 worth of ETH, then you have to provide $50 or more worth of DLP tokens, so dynamic liquidity provisioning tokens. That's how we call them at Radiant. And once you go above that 5%, you are eligible not only to keep getting more protocol fees, but to start earning a boost in Radiant emissions, which of course are in the form of our Radiant token. And that goes to lenders, to borrowers, as I said before. So you are effectively paid to borrow, as I mentioned. And basically, that's where you're getting an extra boost in your yield. So that's basically the economic model. So other tokens like Aave and Compound were not accruing really any of the economic activity that occurs on the platforms, and we really want to reward the loyal users with the real activity that's happening within our protocol, and that's the economic model. So basically, protocol fees plus a boost in radiant emissions if you qualify above that. Very easy to achieve 5% threshold. That's what we believe will help us move towards the end vision of being the most profitable protocol in crypto in the coming years.
Right. Thanks for the this great overview. Yeah, I have another question. You mentioned that the V2 you designed it with after like with the lessons learned from the V1 after a lot of feedback from the community. So can you just share with us what were the main lessons that you learned and that get into fruition with the V1? With
Yes,
the V2.
absolutely, Bob,
Sorry,
and it's a really important question because it made us rethink the whole model for Radiant, and there are several factors that I'd like to highlight. So first, in terms of the emissions, the tokenomics that we had already in September, we introduced a proposal. So Radiant works as a DAO, so it works with proposals presented to the DAO, voted in favor or against, and they follow a very clear and strict process. And basically, the first change that we introduced was reducing by 2, so reducing to a half the emissions sent to certain groups within the ecosystem. So basically, we reduced the emissions that we were sending, and we sent the excess emissions to a DAO reserve wallet because we realized that the emissions were too high for the model, for the tokenomics model that we wanted to build. So that was the first change. Then some weeks ago, beginning of this year, we introduced a new change to the tokenomics model to make sure that to allow for the runway to be extended from the initial 2 years to 5 years, because we realized that the vision of becoming the number one leading money market cross-chain, omni-chain would take 5 years and not the initially expected 2 years, because we were introducing more ambitious goals that we wanted to achieve, and those required more time. So that's the second main change in terms of tokenomics. We wanted to move away from other protocols, which are 99% of the protocols with highly excessively incentivized emissions, as I said before, because we realized that that was really just a marketing campaign. So to attract TVL, which in most cases was mercenary TVL, just wanting to go to the craziest deals in town and going away as soon as those yields compressed. So those protocols we've seen, they were farmed to zero, basically. So the tokens lost all the value because they were really just trying to attract TVL by means of crazy yields, and there was no sustainable business model. So basically, the revenue streams that they were having had no way of going above, so breaking even with respect to the emissions that they were sharing with the user. So basically, what we learned is that you have to focus on sticky TVL rather than on mercenary farming TVL. We realized that the people we wanted to reward were those with really skin in the game. So basically providing liquidity, trusting the protocol in the long term, not wishing to get crazy yields in the very, very short run, but being here for the long-term life of the protocol. And so we basically changed from single-sided radiant locking, as in V1, to staking liquidity. So basically having to provide Radiant tokens as liquidity paired with ETH or BNB, because we realized that just locking Radiant tokens wasn't providing any value to the protocol. It was only providing value to the users, and that was great, and we were very happy about that. But it was not providing value to the protocol, because basically, effectively, those locked Radiant tokens were left out of the market. They were not being used for anything, and they were just locked, receiving yields. So we changed that, and we ask users now to provide liquidity, to provide a Radiant tokens as liquidity if they want to get the share of protocol fees that was going before to users only single-sidedly locking or staking the Radiant tokens. So basically, that was one of the other major changes. And as a whole, we realized that we really wanted to, we really needed to to set up, to build sustainable business model for the next not only 2 years but 5 years, and that's really challenging. So that's where all the ideas of DLP, so dynamic liquidity provisioning, basically the 5% threshold, that's where all those ideas came into play from key contributors and people of the community, and we're very thankful to the engagement of all the people in our community, providing ideas, discussing. Some ideas went through, some were polished and fine-tuned, some were left on standby for future proposals. So it's basically very, very important to build something which is sustainable. We are currently working on how to further incentivize people who have provided more than 5% liquidity, how to be offering rewards as fair as possible, as transparent as possible to everyone, providing more than 5% liquidity. Because currently, as soon as you are above 5% liquidity, you start earning the boosting Radiant emissions. So we really want to further encourage people to add additional liquidity above that 5%. And that's basically things that we're looking forward with our community, discussing with our community for the future. But those would be the main lessons learned from V1, mainly sticky TVL versus mercenary TVL, tokenomics, sustainable business model, DeFi 3.0, sustainable real yields for the future, and changing from single-sided staking of Radiant tokens to providing liquidity.
Gotcha. Yeah. Indeed, you with the V2 and with the DLP, I think Radiant introduced this novelty into the space that, as for now, we are seeing that it is going pretty well. So yeah, maybe there will be more projects that will get inspired by what you introduced. And I'm curious on something about one of the key features, and I think here is where we also can, after that, transition to talking about how we can collaborate Fuji and Radiant. About the key feature that Radiant stands out is the cross-chain. Do you, from the V1 through the V2, do you have an idea of how users like this feature, being able to hop from one chain to another, to execute, to get the funds they have borrowed on another chain?
Yeah, sure. And we are very happy to have seen the growth in total value deposited in in BNB the first days of launching. It went really up, and it made Radiant be within the top 10 in BNB in terms of total value. So basically, it's something that proves that our current users and new users were very attracted to the option of using Radiant and BNB. And then in terms of cross-chain, we've seen quite a fair amount of movement of Radiant tokens and people moving funds from one chain to the other, or allocating different kinds of proportions of weights to their assets on BNB versus their assets on Arbitrum. So we are really seeing that the users have seen more options opening up in front of them in terms of more advanced trading strategies, or simply going after the best yields that you can see on Arbitrum, on BS, or on BNB. So basically, it's more flexible for users. Users are very happy to be able to use features such as, for example, locking, which is one of our popular features, both on BNB and on Arbitrum, and that makes us very proud of what we have built. And basically, moving forward, because this is something which our users have been asking for many months, and that's within our roadmap. And at Radiant, we will be adding 5 major EVM chains in the coming weeks and months. So we've already jumped onto 2, Arbitrum and BNB. We will be adding up to 5. Plus, we will be adding more collateral types. We add blue chips only mainly for risk recent in V1. So that was Rapid Coin, ETH, and stable coins. We've already added BNB, of course, on BNB chain, but we've already added Wrap Staked ETH and ARB on Arbitrum. And that's already the first assets coming through. There are proposals for a number of additional assets to be added. The internal risk committee will control parameters of those assets, pose as small a risk as possible to the protocol. We've seen this happen with other major protocols trying to list too exotic assets, and that's not something, that's not the route we would like to follow at Radiant. Of course, it's always down to our community, but that's basically the vision that we have. And being launched on 5 major EVM chains with 20 plus collateral types, that's our key target, the first key milestone, will surely offer more trading strategies for our users. They're very happy of being able to move assets chain to change, and that will only improve as we move to other major chains and they see even more trading strategies and options in the chain.
Okay, Isaac, can you hear me? Because your voice is the sound
Yes,
is
yes, I can hear
yes,
you.
yeah,
Can you?
now it's better, yeah.
Okay.
Yeah,
Was the
because we
answer?
were,
Do I
yeah,
need to repeat any part of the answer, or did it go more or less loud and clear?
yeah. I think it's very clear from
Okay,
on my end.
thanks.
I have one question regarding how on the architectural level of the protocol are the pools like the Radiant on Arbitrum, the pool of Radiant of Arbitrum isolated from the pool of Radiant of on BNB chain, or they somehow communicate. Yeah, they're or it's a common pool for all deployments.
The way we currently work is that the pool on Arbitrum is built on Balancer, and well, it has additional features and it receives Balancer rewards and so on. But it's basically built on Balancer. The one on BNB is built on Pancake, so they are essentially 2 different pools, and this will be the way to go for most of the future chains that we will be launching on. So that's the way. From an architecture standpoint, that's the way that the pools are built currently. There are additional pools, of course, where you have additional trading options outside of Balancer and PancakeSwap, but they are not eligible for becoming DLP and receiving a share of protocol fees and an additional boost in Radiant rewards, of course.
Okay, gotcha. Thank you.
You're welcome.
Yes, I believe we can discuss a little bit potential synergy collaboration between Fuji Finance and Radiant, because we are building also cross-chain money markets aggregator, and I believe Bayan can explain a couple words because obviously Isaac also knows what we are building, but let's repeat it again, please, Bayan, and then.
Yeah, sure. Yeah, I'll pitch in. So yeah, we are building we're like a cross-chain. We're also like very close to releasing our V2, and it will be a cross-chain money market aggregator. And Radiant is one of our integration partners that we are going to aggregate Radiant with the other available money markets on the on Arbitrum and on the chains that you'll be deploying. And actually, it may seem that we are kind of competing, but because like we are also on the cross chain side, we are also like dealing with borrowing and lending. But from another perspective, I think it's very it could be like a very great collaboration because we can offer to our users access to the liquidity available on Radiant on different chains, and so that everyone can access in a chain agnostic way. So the other difference that I can point out is that we are building on top of for the cross-chain part, we are building on top of Connext. So yeah, this is something that differentiates us. But yeah, happy to. I mean, we already built the adapter for Radiant for the, I think, for the V2, if I'm not mistaken. And yeah, ready to support you from the release of the V2.
Well, absolutely. From our side, we are more than happy to be open to this kind of collaborations, partnerships, because we think it's really a synergy for our users. So of course, it's always down to the DAO to approve the details of potential collaborations. For example, in terms of collateral types or potential partnerships with protocols such as Fuji and others. And we're really happy. We're really excited to see what you guys are building, especially with V2 coming, as you were saying, and we think that there are potential synergies which could be interesting for our users. Basically, we believe in a future which is composable, which integrates different protocols, because of course there are overlaps between what you're doing, what Radiant is doing, but we strongly believe that the future is stronger and more robust if we add efforts among all protocols, because Radiant collaborating with Fuji collaborating with Radiant will only open up more use cases for both our communities. Will make it easier to access liquidity, which is currently fragmented in the whole of the DeFi space in the different chains. So our vision at Radiant was to unite the 22 billion fragmented liquidity according to DeFi Llama that's floating around in different chains, so located in different chains. And we really think that there needs to be tools, many tools, platforms to open up the options to streamline funds from one chain to the other. We really believe in a future of being a layer zero of blockchain, in the sense that people don't have to understand necessarily what's happening under the hood. So a person wants to buy an NFT on Polygon, and they may not know what's mainnet, what's Polygon, what's bridging. They just want to buy a cool. They have the funds to allow that user to put their funds, buy their NFT, and not need to know what.
Sorry, Isaac, we're here really bad hear you.
Okay. Just give me a sec. Give me a second.
Yeah, thanks.
Okay. Hopefully, is it better now?
Yes.
Okay. I just changed network. Sometimes one time is better or the other, but I have a backup network just in case. So, sorry. What I was saying is, so I apologize for the quality. Hope it's loud and clear now. What I was saying is that we basically want to unite fragmented liquidity. We want to become effectively a layer zero of blockchain, meaning that people don't necessarily have to understand what's happening under the hood. So if you want to buy a cool NFT on Polygon and you have your funds on mainnet, then there needs to be a tool to be able to allow users to buy NFTs on Polygon with their funds on mainnet without them having to know how to bridge what a chain, what layer one is, what layer two is. Because basically we love speaking about technology, and I'm the first one. I love speaking about technology in all the shows. But the vision that we have at Radiant is trying to onboard the next 100 million users into DeFi. And those are not going to be users who are especially or necessarily technically savvy in DeFi or interested at all in knowing the technology under the hood. So we really need to offer them a platform which is a money market open to many different assets, collateral types, many different trading strategies, many different use cases, and cross-chain transparent layer zero, really as a backbone of the future of blockchain. And I think that partnerships, potential partnerships, collaborations, and synergies with protocols such as Fuji only add up to that vision that we have at Radiant.
Yeah, definitely agree that I think we are here, we are aligned in this vision of abstracting away all the chain complexity, dealing with different parts of the ecosystem, so that the users can just focus on what they really want to achieve without having to switch between like different places, several UIs to do
Absolutely. I think that's the future, and as many protocols as we are seeing, for example, on Arbitrum, other chains. We are really excited to be collaborating and to opening up the discussion to our DAO to consider if they are interested in this partnership or that partnership, because we really believe that's the way to move forward for a stronger DeFi space in the future.
Yeah, great. Obviously, we should build a DeFi future together. And actually, if we are talking about collaboration synergies, maybe you can shed some light. I mean, give us some alpha regarding some partnerships, collaborations, listings, etc. Something for our community exclusively, sir, please.
Well, sure, absolutely. So basically, the the interesting aspects. Well, first, recapping a bit of what I said regarding Layer 0, that we are moving forward to a full integration of Layer 0 on V3, and already our token is full OFT, which is already a big step forward with respect to V1 and with respect to other protocols. Then, of course, we have the partnerships, collaborations with Chainlink and some other big institutions, big companies, big protocols, big names in crypto. But in terms of alpha that I can share with your community, especially, and this is something which has happened in the recent days and weeks, we are very happy to disclose that Arbitrum shared some of the ARB tokens of the recent Arbitrum airdrop with Radiant Capital. And specifically, we received 3.3 million ARB. So these funds we are really happy to have received, because they are a proof that we are one of the most active, dynamic protocols being built in Arbitrum and happening in the Arbitrum universe. And this is down to our community. So that's hats off to our community. And these funds have been transferred to our treasury. And basically, the future utilization of this allocation will be discussed and voted on by the Radiant DAO. But it's a proof, it's a signal of what we built on Arbitrum, and basically all the users that have been contributing via Radiant to the Arbitrum ecosystem. So that's something that makes us very proud. Then another exciting partnership we've recently embarked on is launching PLS Radiant on Plutus DAO. So basically, they want to name themselves as the premier governance black hole on Arbitrum, and this basically allows users to deposit the Radiant DLP with Plutus, so the liquidity provided to Radiant via Plutus, receiving the maximum reward rate on the DLP. So that's locking for 12 months because we've included variable locking lengths in V2 from 1 month all the way to 12 months. And basically, if you deposit your Radiant liquidity, your Radiant DLP with Plutus, you will receive the maximum rewards as if you did it via our own platform, with additional PLS emissions, whilst remaining totally liquid. And basically, you get this in return for giving your governance power to Plutus DAO. This is an attractive option, a very attractive option for many. And this speaks volumes also of the partnership strength that we discussed before, because one could say that Plutus is competitor in a way to Radiant, and this is just adding value to the users whenever you understand really the use cases that this offers the community and how it really works. So basically, this is something which we are very happy about. And Plutus is developing a Radiant Vault option, which they are calling PLV Radiant, which will be disclosed probably end of Q2, so in the coming months. And basically, as a final partnership or collaboration that we are very happy and very proud to have is PancakeSwap, the syrup pool that they have recently integrated Radiant. So basically, this allowed Radiant users to stake the Radiant, to earn Radiant by staking Cake. And currently that was yielding an interesting APR. It was around 13-14% some days ago. And finally, when it comes to security, as I said before, well, all the partnerships that we've developed and working relationships with all the auditing firms that have worked auditing Radiant's code, so that's SpecShield, Solidity Finance, Sokyo, Blocksec, and now OpenZeppelin. So we are very, very happy to have built all of that. Plus, we launched a bug bounty program on Immunify as we launched V2, so that's open to the public, and anyone can find any vulnerability or any bugs in our contracts in return for up to 200K. And we also have an on-chain real-time detection program with Forta. So that's an overview of all the major partnerships and collaborations that we are very proud of having at Radiant currently.
Wow, wow, it's impressive. Like really, you never stops. Like just go and go and go and ahead.
Thank you.
Cool, cool. Okay, so it's almost 50 minutes. Our interview like really, really long. So Bayan Daigaro, if you have some questions, please feel free to ask. And meanwhile, I will check AMA questions channel. So Bayan Daigaro, please.
So on my side, everything has been explained or asked by either Puyan. So, but yeah, really good job what the Radiant team is doing. Congrats.
Well, thanks a lot.
Yeah, it's very exciting. So it's a hectic ride, of course, as usual. Also building at Fuji, but it's a hectic ride, very exciting, very challenging, but love it because we are on uncharted territory, so this is new territory. We are trying to challenge it for us.
Hey, Isaac, I think we have again some
Yeah,
issues with the.
again, some issues with connection.
Well, is it better now? Hopefully, it's better now.
Yes.
Better.
Okay. Well, as I said, we are on uncharted territory, so really excited to be the first ones doing many things that hopefully will be useful for other DeFi and crypto protocols. And we are learning a lot along the way, and learning a lot from our community and from all the partnerships and collaborations that we're building. And that's well basically the key factor why we are currently at close to or over, depending on the day, 500 million in total value deposited, and that's something that's down to our community, our users, and all the key contributors behind the Radiant project.
Yeah, yeah, really great. So basically, regarding community questions, the same. I believe you already explained all nuances, and you don't have any new questions. And I really appreciate that you take the time to visit us today, Isaac. And I believe it will be really, really good and bright future for decentralized finance overall. And we will like create financial equality to all the people in the whole world, because I believe it's main goal for decentralized finance. So thank you again, and like really good luck, and we'll be in touch as a partners already. So thank you, thank you.
Really, thank you really for having me as guest speaker today. Thank you everyone in your community for tuning in, and I'm really excited. I'm really very bullish on what's happening in DeFi right now, and what's brewing for the next months in the DeFi space, and hopefully, well, very much looking forward to what we are going to build, all of us together in the future, and particularly between Fuji and Radiant in the coming months, as per the DAO's instruction as always. So thanks a lot for having me today in the show.
Yeah.
Thank you again for joining and for the great show today. And yeah, thanks to everyone who was listening today. Artem, maybe you have to give the instructions, remind the instructions.
Yes, like last instructions, because Isaac, sorry, we have this community incentivized program during the community calls. Fuji educates. People should take screenshot as a proof of attendance, and they will fulfill special Google form and can get special NFT on Polygon network, like a proof of attendance, but on Polygon network, it's not POAP. So basically, it's like for fun and to incentivize our community to educate themselves. So please, guys, don't forget to take screenshot. It's your last chance. I believe that all of you already did it, but if not, please, you have last 10 seconds to do it. And after that, I will open the Google form immediately after this interview. Okay, so thanks again, Bayan, Daigaro, Isaac, to you also, and thanks to our community. It was Fuji Educates with Isaac, the Director of Communications, and Radiant Capital, one of the brightest star on decentralized finance. And like, see you next time, guys, and have a nice day, evening, or morning. Bye, guys.